You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Friday, 8th day of November, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see my screen, and I'm going to put a chart up here of the S&P 500 Emini Futures. Let's go with a daily chart as we continue this high-level battle at the top. Epic battle. All right. If you can't see that chart, go to our homepage at CFRN.net. On the right-hand side, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, not to worry, you still want to point that browser to cfrn.net/live. You throw a /live on the end, and there you'll have a live real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, here we are. at the top. We've been talking about this area all week. What is that area? It's just an area. Now, we arrived at that area by measuring the distance between that high, that all-time historic high, and that all-time historic high. We took that number and we added it onto this all-time historic high, and we asked ourselves the question, what if we got a measured move? Would this be where the market finds a top? And the answer is yes. However, price is there, but we don't know that it's a top. You never know a swing high or swing low till after the fact. Anyone that tries to tell you different, well, be careful, all right? 50% of the time, if you're guessing, but how many times have you thought, man, the market can't go any higher, so I'm going to get short? Fatal thinking. Same thing at the bottom. Well, I know we can't get any lower than this, so I'll just go long. The market can stay liquid far longer than you or I could ever dream of. So that's how we came up with that area. This area here represents, and let me show you. If we look at this as a leg, now you know what, better yet, let's just look at the last leg. Let's do that. From the low to the high. Now that high put in yesterday the 7th, the low put in October the 3rd. A 24% Fibonacci retracement would bring us right back to the BBC. And the BBC is currently at 3046. And we're currently at 3090. A 45-point drop. That would be the shallowest retracement if this is in fact a top. Okay? Not a forever top, but a top for now. A close below today's open. Today, tomorrow, Monday, that would be the first step. Now that's considering we don't move meaningfully higher, which we could. So that's the 24. Here's the 38, which lines up with these tops right here. Then there's the 50% Fibonacci retracement, which is just above the bullish cross. And for us, that's a very important area, 2962. And then here's the 62% Fibonacci retracement, which lines up with these highs right here. So it's all an area. As of yet, there is no pullback underway, really. We're trading near the high of the session here. We traded significantly lower. In fact, let's see just how much lower we went. Oh, while we're here, now because we've had no meaningful retracement here, I'm gonna have to back up a leg to do this, to go from that low to that high to this low. Fibonacci price extension, different than a retracement. Think about it for a second, you'll figure it out. So what does that do? You with me? Let me show you that again. If you don't use price extensions, you might as you're looking for targets. Now, as a CFRN trader, passport holder, you always have a target on any trade. If it's a long trade, it's the zone overhead. If it's a short trade, it's the zone below. It's really that simple. Once you know what the trade to target is, you then have to just survey the landscape to see, what obstacles are in your path. Okay? So right there, that's a 100% Fibonacci price extension. It has nothing to do with politics or tweets or China or Joe Biden or anybody. The distance between this low and this high, a measured move from this low would take us there. Is there any science that says, well, we have to make a measured move? Absolutely not. Okay. This was so again, this is an area. All right, so let's look at it up close. We're at the zone. So what happened overnight? Well, yesterday evening, afternoon, we got a bearish cross at a weekly trading zone. Price tried to move higher, but there was an obstacle in the path, BBC. When we approach that from below, we expect good resistance, which we got. And that took us down to these highs right here. What was once resistance became good support. Okay? Resistance, support. Bearish cross, pull up, good resistance, leg down to support, previously resistance. That support gave us a bounce up to the BBC. Whenever you pull up to the BBC, you expect it to be good resistance until it isn't. This is what it looks like when it is, and this is what it looks like when it isn't. We get on the other side, pull back. It holds as good support, sends us right up to the weekly trading zone at 86.87. We expect that to be good resistance until it isn't. It was, and that sent us all the way down to the zone below. So from 86 to 73, that's 13 S&P points. Alexa, 13 times 50.
13 times 50 is 650.
All right, $650 per contract traded. Now, good support sent us back to the BBC, where we expect good resistance until it isn't. We consolidated here, wide-ranging consolidation, big candles, and right up to the zone. Will it be good resistance this time? It was here. It was here. Will it be here? What if it isn't? Then what? Okay. If we get on the other side of 86.87, the highest weekly trading zone for this week is 31.20. It's up there ways. The chart doesn't want to scroll. There we go. 2021. See it? Okay. If we get above this zone, hold it on a pullback, what are the obstacles in our path to getting to the zone overhead? Well, there's one. There's another. Now, a move above this high, if we look left, I think we all know there's nothing there, right? So does that mean if the S&P gets above this zone, holds it on a pullback, and begins a run at 31.20, would we expect resistance here? Yes. And here? Yes. Once we hit 3100, we're in virgin territory. Okay? No obstacles. Price could take off like a rocket, but the market has much work to do before that can happen. Got to get above this zone. Remember, over here, good resistance became support, consolidation. Sent us here. Back to support. Support gave way. Took us down to resistance turned support, which sent us back up to resistance, which sent us down to support, which sent us back to resistance. That's how that works. Every day, in exactly the same way. Now, is the market moving differently than it moved yesterday? Depends on what you mean by differently. Is it traveling between support and resistance? Oh yeah. It's the only thing the market knows how to do. Buyers take it up to the sellers, and the sellers bring it right back down to the buyers. Over and over and over, day after day. And on our charts with our indicators, it holds more often than it doesn't in this time frame. That's worthy of a note. Okay. All right, we'll break it all down. We'll walk through the moves in each market. We'll look at the Concierge Trade Alerts. We'll look at the Logic 247 alerts. But for now, let me give you the numbers from around the world, and then we'll get a recap from Michael of what happened in the trading room this morning. Currently, the Dow down 44 points. NASDAQ up 18. S&P 500 just barely positive, less than a point. Russell 2000 up 3. In the commodity basket, crude oil up 2 cents, trading 57.17 last. Gold down $2.10, trading 14.6430 last. In the Asian markets at the close, Nikkei posted a gain of 61 points. Shanghai lost 14, and the Hang Seng lost 196. And in the European markets at the close, FTSE down 47, DAX down 60, the CAC down 1.25. That gave us a mixed day in Asia, a red day in the UK, and so far it's a mixed day here in the US of A, with the Dow being the only negative at the moment amongst the indices. S&P trading right at the flat line, and crude oil positive by 3 cents. Gold down $2. Friday trade, heading into a holiday. Michael, Monday Veterans Day, is that a full-on holiday?
I think the markets are open on Monday. I'm pretty sure they're open.
I think we had this conversation last year where we thought,
yeah.
I mean, did they close for Columbus this year? Oh wait,
No.
we renamed that. Okay. All right.
No, they didn't.
Okay. Well, if you're ready, you can take it away.
Okay, I'm ready. I am ready.
Okay.
There we go.
All righty. I'll hit mute. It's all yours.
Okay, thanks. Okay, let me start with this page. Okay. If you have not, good afternoon, everybody. Today is the 8th day of November, 2019, my birthday. If you go to the home page here at CFRN.net, in the right-hand column, to take the free trial, you go to 5-day free trial, apply.cfrn.net. Click on that, and you'll be brought to this page, eminitrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. Hit the register now button, and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial. So you got to do that. All right, so now I'll go to the spreadsheet. And in the spreadsheet, you will see that we had another green day today. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 8th day of November, 2019. We made 5 ticks in crude, 4 ticks in gold. Not exactly a stellar day, but we did get the goal on our first trade today. So today, it took 8 minutes and 1 trade to get to $100 a contract, and we took a total of 8 trades. So on the month now, we're up $672.50. That's over 6 days, averaging $112 per day. On the year, we're now at $31,458. That's over 203 days, averaging $154 per day. Keep in mind, that is 1 contract and only 2 hours per day. Okay. And I miss a bunch of trades because I'm training. Excuse me. Okay. Let's go into what happened, because there was a lot of movement today. But not all of it was able to be captured. Okay. This was our first trade right here on gold. We shorted right there on the close below the trend line, and we picked up 10 ticks. Then I missed the momentum short, and then I grabbed the next one, picked up 2 ticks. Then this all happened. And at 10 o'clock when the news came out, that all happened. And it was just moving too fast. All my charts were sticking at that time. And then we had a break even here, and we stopped out here, -8 ticks. That put us down to +4 on gold. Okay, we had a break even there. We missed a nice long trade right here. And then we get into the break. During the break, there was a shorting opportunity there. Could have picked up 10, 15 ticks. Another shorting opportunity in here. And another one right here. So there was a lot of opportunity there on gold today. Right? We ended with +4 ticks. Now, this is the YM. I'm not even going to go over the YM because I didn't do anything with it. And I did have, originally, I had the yen in there. But I took it out because it wasn't doing anything. I mean, it was worse than the euro. Here it is. Let's see. Here's 930 right here. And it was just nothing you can do. Because right here, the high of the day was right here. You know, you could have gone long right here, going right up at the high of the day. But not something I like to do. Okay, so I put the YM up. I don't even have a YM DOM open, but I was identifying trades as they came up on the YM. And we got to get something for this spot. You know, I had the Russell in there. I put the Russell up today for a little while. Well, for a few minutes. But my DOM was still messed up. It's not keeping up with the charts. So I don't want to trade that. You know, if that's the problem, if you guys ever get that problem with your charts, you know, you need to go to a higher time frame. That's the deal with that. All right, and crude oil. Let me go look at these options. Hang on. This morning, I said, look at the 57.5 options, the calls. They were $340 this morning. They're at 800 right now. So we doubled today. Well, more than double. But the first one, I have a printout of it right here. It was 410 when I first set it. And price dropped. And then I looked at it again. It was 340. And I said, now is a good time to buy those options. Because this thing is going to go back up to 57.14 at least. And look at it now. Anyway. I'll pat myself on the back. Hang on. It's loading up the data. There we go. All right. On crude, it was really choppy in the beginning. The first half hour. Then it started to move. But here we were going into the low of the day. Okay, so we couldn't do anything with that. Then, you know, and it was down here this morning at, you know, whatever time that is, 10 o'clock, that I said, let's go look at the options again. And I said, look at the 57.5. Because, you know, 57.14 was what I had said yesterday, or actually Wednesday, to look for. And $800 total volume. It's got good volume. It's got a lot of open interest, but too late now. If you didn't get into it, you shouldn't get into it. Okay. On crude, we took 5 ticks here and a break even there. Okay. We missed a long trade there, and then we get into the break. And now something had to have happened to make crude react this way during the break. But it went up right there. right there, right there. And then it started getting choppy, and the slingshot down here is telling you that it's getting choppy and not to go for anything right now. And that's pretty much where it is. There were 3 trades, 3 nice trade opportunities during the break. Okay, we ended with a +5 on crude. Now the ES we didn't do anything with. Oh no, I guess we did. Yeah, we had 1 break-even ES trade right there. Okay, and it went zone to zone to zone today. You know, it started out up here. Hang on, it's loading up. Started out up here, then worked its way down slowly and messy. Worked its way down, hit this weekly trading zone, put in the low of the day right at the zone, then started working its way back up. And we took a long trade right here that we got to break even on. And it slowly chopped its way up. It's a slow grind up, as our late dear friend Mike Reed used to say, violently sideways. And that's where it is right now. Okay, and gold. Look at gold. Look at you go, gold. Okay. So we'll go back here to the spreadsheet. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 8th day of November, 2019. That's a great day. Yes, I am a Scorpio. We made 5 ticks on crude, 4 ticks on gold, put us at plus $90 on the morning session. Today took 8 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 8 trades. So on the month now, we're up 672. That's over 6 days, averaging 112 per day. On the year, we're now at $31,458. That's over 203 days, averaging 154 per day. Okay. Now, if you have not taken the free trial, go to the home page at CFRN.net. And over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought here, where all we ask for is your name, your email, and your phone number. Hit the register now button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. All right. All right. And that's it. With that, we can pass it back out to fabulous Phoenix, Arizona. It's Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am.
Thanks, Tim.
All right, that should do it. Okay, how about a recap of the recap?
Today, it took 8 minutes and 1 trade to get to $100 per contract. And that was on gold.
That's good bingo.
It is.
So I found yesterday, I was minding my own business on Craigslist, and all of a sudden, in walks a 50-inch Vizio flat panel for $100, right down the street from me.
Really?
And it just so happens that I have 50 diagonal inches of space left on my wall. So you want to mount it above the doorway. I think that would be very cool. So yeah,
You're going to use it.
Just thought I'd share that.
You're going to use it for trading? I mean, remember you're standing up now, right?
Yeah, I stand up now. No, actually, what I'll probably do is some of the financial channels that I watch, I'll probably stream those. Probably do a split screen and maybe stream those up there. I don't know. Just, I don't really need it, but $100, 50 inches. It's just, it seems wrong not to. So, another guy had a 42-inch Roku TV, $20. He said it's. I hardly ever use it. It's in storage, but some guy promised to come get it, and he says I'm pretty sure this guy's going to flake out. So if he does, you can have it. So I'm waiting to hear back from him. If I get that little, if I get the 42-inch, I'll put that Agnes and little D are coming to visit for a month. He's got to renew his passport. So he's going to sleep in the living room, and I can put that Roku smart TV in there for him. Our family TV is in the family room, I guess you call it, or the den. When I was a kid, when it became the den, that was like the cool thing. It was like the 70s equivalent of a man cave, but it applied to the whole family. So,
Yeah.
oh, a reminder, guys, that I mentioned this the other day. For those of you that trade crude, let's go to the crude chart. Okay, so this is crude, and watch price. The same. Okay, it's not a different market. It's the same market, but two different contracts. This is considered a mini crude. And while we're talking about it, we'll just take a look at the specifications. Now the micro E-minis that the CME just recently introduced are is it 1/10 the size? Yeah, instead of $50 a point, the S&P pays $5 a point.
Yeah.
Okay, so let's go to Daniel's trading specs. Contract specifications. And then we'll go to energy. And then we'll go to QM right there. Now, this is the one right now that everybody's trading. Crude, GCL, it's the one we've always traded in the room, and the one we talk about here on the show. $10 a tick. A tick is 0.01. Down here on the E-mini crude, the QM, see, instead of it being 1,000 barrels, the contract size is 500 barrels. And the tick size, instead of 0.01, it's 0.025. And that tick pays $12.50. Now, Michael, you're the math guy. This is 1/4 the size of this.
Hang on a second.
Let's open it up and just read about it. They probably tell us. 500 barrels. Trading's the same. Hours are the same. It's this. That's what I really have to stress so nobody gets confused. It's the same market, just two different contracts for the same market. One contract's 1,000 barrels. The other contract's 500 barrels. So a move of 0.025. So it would take 4 of those moves to equal 0.01. Correct?
Yeah.
So 4 ticks here is really the same as 1 tick on the full size contract.
Yeah. Yep. That's what it looks like.
They're not giving me the explanation I wanted, so let's see. E-mini, or just mini. No, I guess it is E-mini. No, it's with crude. With crude, it's actually E-mini, crude oil. All right, tell us all about it.
What's the volume like on that?
You know, it's. I'll bring it up. Well, here, I got it up.
There it is.
It's sufficient, I believe, for anyone that's learning to trade. Because even in the still of night, or midnight, at midnight we had 55 contracts, and then 221, then 303, 117, 143. So if you're still in your journey where you're trading 1, 2, 3 contracts, you should have no problem with this. If you have an interest in it. I'm just bringing it to everybody's attention. It's not a suggestion or recommendation. I'm just letting you know it's available, because when I mentioned it in the Telegram channel the other day, A lot of people said they didn't even know that it existed. I really hadn't. I knew it was there, but I'd never really looked at it. Now, once we get into the day session here, there's 700 contracts, and these are 30-minute candles. 868, 1400, 1200, 1400. I think on a daily basis it does about 15,000. Here's daily. Daily, so far today, 15,000. Yesterday, 19,000. Day before that, 21,000. Kind of like I still remember the Dow being down in that area, volume-wise, way back in 2005. I might be wrong, but probably not. Okay, let's go back to the 30-minute. All right, guys, so if you ever see QM on my chart, just know it's the exact same thing as GCL. Same market, different size contract. Now if I can just get a drop down.
Interesting. Interesting.
Come on. Did you just get a huge volume surge or something?
On crude?
On anything. Whenever my charts do this, it's usually accompanied by some spike in.
Yeah, mine locked up this morning too.
Yeah, I heard you mention that. And somebody asked, "Well, how do you know your chart's locked up?" Because you can't do anything.
Yeah.
Basically.
Look down at the bottom and see if the clock is stopped.
All right. So now we're back on 30 minutes. Okay. Still on the QM, but I'm just going to switch it back to the GCL. And there we go. Okay, so everybody knows about that. Now, I showed you guys the other day how I had put a 30-minute BBC on a 5-minute chart. It's no great science or anything. It's just a matter of coding it, telling it to look at a different source. But last night I took a look at putting a 4-hour on it as well. And I'll show it to you guys next week. But it's really, I think once you see it, you'll really like how it works. You got a 5-minute chart. So you're watching a 30. This is what I watch. I watch a 30 to spot, these bigger picture type moves. This is what I show every day here on the radio show. Now, a lot of folks drop down to the 4-tick range to actually execute the trade, because even though the big picture says, okay, we're either at a trigger for an alert or the setup's just there on the 30-minute. So by dropping to that smaller time frame, whether it be a 4-tick range or a 5-minute, you can actually enter on the pullback on the smaller time frame, right to the BBC, just the way you get taught every morning by Michael in the live training room. This helps you to manage the risk. That will enable you to enter a trade with a smaller stop than always having to use the 30-minute to place your stop. Okay. Now, if you want to know for the S&P as an example, the 30-minute BBC is 3082. So on a 5-minute chart, I would have the regular BBC, then I have the 30-minute BBC. Last night I added a 4-hour BBC. It's really amazing how price turns right where we expect it to, and how it plays back and forth between the BBC. So anyway, I'll put something together to show you guys next week. I just want to mention it to you. I find it interesting. And while I'm tinkering with all this stuff, I'm going to also work on the alerts that we started on. And I lost the guy that was writing that code, so now I'm just working on it myself. And should have it done hopefully soon. I'll just leave it at that. Okay, we're on the 30-minute S&P. And we're going to take a look at the Concierge Trade Alerts from last night. So I'm going to drag them up to the big screen. If you want a screenshot, you can have one coming your way. Got them out last night at 6:20 p.m. Eastern. All right. Consider being short 3082. Okay, that's going to start over here. Important prices, important areas are almost always tested. So how many times did we trigger? We're going to count them up. I do believe there was a corresponding logic 247 at that same price. Whenever you got two different things pointing at the same important price, important area, it almost always deserves a second look. So if you got short at 30.82, the initial drop took us down to my chart, lock it up again. Okay. All right, so we got down to 77.25. So from 82, I'll just call it 78. That's a low, yeah, 77.25. We call it 77. Either way, 4 or 5 points. So you got 4 or 5 points, and then we find support at these previous highs. Resistance became support. Put in a little double bottom there. Went back above the trigger. Now on this drop, we only dropped like 1.25 points. Entering here though, you got to recognize that your stop, based off of a 30-minute chart, is going to have to be, here initially. And the important thing here is the zone, because we expect that to be good resistance until it isn't. So on this move up, it was in fact good resistance. It sends us back down to the trigger, and this time we make it all the way to the zone below. That's 13 points, $650 per contract traded. And then we go back above the trigger, triggers again. This time it drops to 79.5, so 2 points, 2.5. Now we're back above the trigger at resistance. We got a high, we got a lower high, another lower high. Question is, will this become another lower high? I mentioned earlier that we've got that obstacle and that obstacle. Really, we have even that obstacle. And of course, the zone. So if price wants to move higher, it's got to get through the zone. It's got to get through this obstacle and this obstacle and this obstacle, if we are to put in another all-time historic high. On the long side for the S&P, consider being long 30.89. Now, that was 7 o'clock last night, and the alerts came out at 6:20. So that would have been this candle right here. So price ran up to 90.75. The trigger was at 89. Okay, so if you just entered on the number, it gave up a little over a point, and this. And with this wick sticking up above this zone, that's about as a bearish a combination as you get. And so we see what it's done. It did make the trip all the way down, all the way back up. That's 13 points down, 13 points back up. Is it going to make the trip again, or is it going to attempt to take out this obstacle and this obstacle and this obstacle to get itself up to? Now, last week's highest weekly trading zone we did not hit until this week. I think it was Monday. So that's where we are on a daily S&P. This is where we are on a 30-minute S&P. So let's look at the Dow. Okay. The Dow had good news last night from Disney, but and who was it that asked for those Amazon weekly trading zones last night?
I don't remember.
Somebody in the
It was
workshop.
Kevin.
Was it Kevin?
It was Kevin S.
Okay.
Okay.
Well, Kevin, I did them for you. I won't make a habit of it, but I did. And I dropped them in the Telegram channel. So I might look at it again this Sunday night just for kicks. In fact, maybe I'll do 3. So I'll look at Amazon, and if anybody wants to suggest another equity, I'll look at those. I'm not going to start doing them on a regular basis. Well, let me just say I'm not going to promise to start doing them on a regular basis. I'm not going to say I won't do them because I could talk myself into it at any time. Okay. On the Dow, long 277.55. It's up here. And we did not see that. So no trigger on the upside. And on the short side, 27.575. And these are all current weekly trading zones. 27.575. Over here. That took a long time to get there. 25.575. So we barely triggered it, and we're just rolling sideways here at the trigger. We dropped from 75 down to 41. So that's $150 per contract. And then we got back above the trigger and did it again. And now we're back above the trigger. On the Russell, been consolidating here at the zone for 1, 2, 3 hours. Last night on the Russell, consider being short 15.92, which that's going to start here, 15.92. Long side 16.03, so no trigger on the long side. So from 92, we dropped to 90, so that's a 2-point move, $100 per contract. And then we trigger again. Kevin, I dropped them in the Telegram channel, the members Telegram channel. In fact, I'll drag them up on screen here in a minute. Then we trigger again. This time we make it down to I'll call it 88. So that's 4 points, $200 per contract traded. And back up to the zone where the market is currently deciding, is it going to 1611 or is it going to 1581? It will go to one of them. Probably not today in this session, although it could. But by the time we talk Monday, pretty comfortable saying that we will have seen 1611 or 81. Oh, so the guy on the radio, he said that prices might go up or they might go down. Yeah, it's that simple. Now, of course, you're able to determine which zone it's trying to get to. Not yet, because it's still making up its mind. Once it makes up its mind, it will be clear as a bell where it's trying to go. Now, just because it's trying to go somewhere doesn't mean it always gets there. Always gets there. And certainly not always on the first attempt. But simply knowing what the objective is, knowing what the mission is that you're on, that can really help you make some savvy trading decisions, because you're not fighting the market. The market becomes your business partner. And whatever the senior partner says, let's do it. Hey, let's make a run at the zone overhead. Okay, I can't promise we'll make it. That's all right. I got your back. Let's go. And halfway there, if the mission changes, you can see it right on your chart. I'll show you. There you go. First warning sign that the mission is changing, potentially changing. At this bearish cross, price says, I'm going lower. let's go. So leg, retracement. Whenever you get a pullback like this, and from either direction, when you get a pullback to the WTZ, the WTZ and the BBC, that's a gift. Respect it. The divine moment in trading. Short here, target at least down to these lows, which, yeah, it looks like we took out by a tick. Now it's back to resistance. Fight the battle. Looks like sellers are going to win here, but that was apparently a head fake because right here, whichever side of the BBC you're on, if you're on the north side, anticipate higher prices until the market stops giving higher prices. And when you're below it, you anticipate lower prices until the market stops giving you lower prices. Leg, retracement. Now this next leg, so you don't have to wait for this because you have a real good indication here. Got a nice leg down, you get a retracement. It's time to put in the next leg, and we get stopped by blue and climbing. Okay. Right there is your first heads up. This thing may be turning around. And it was a little back and forth, and then right here, ahead of that, and ahead of all this, market says, you know what? Heading north. Over here, I'm heading south. Over here, it says I'm heading north. So hopefully you'll understand, if you're on this side of the street, the same side of the street as the market, it's a high probability that you can do very well. And when the market changes the side of the street, don't question it. Don't argue with it. Just do it, as they say. And those are the rewards. Okay? When we take out this low, leg, retracement, we retrace right into red and falling. And we have to expect that to be good resistance till it isn't. Just like we expect the BBC, on a pull up to it, we expect that to be good resistance. Now, when we pull down, if that's what unfolds, if we pull down to the BBC, we have to anticipate support. So price not only has to break free of this zone, which as you can see has sort of a magnetic attraction, it has to break free of the zone, and then it immediately has to get below the BBC. And if that's what happens, then we'll be back at the trigger again. Okay? All right, let's go in Q. So the zone is actually 82.26/27. This one is 95.96. Concierge Trade Alert. Long 82.53. Which hasn't triggered yet. And on the other side, 82.22. That would be over here. Actually, that would be all the way over here. 82.22. So we went from zone to zone, back up to the zone, back down to the zone, back up to the zone. 1, 2, 3, 4 trips. And from 22 to 96, that's going to be 26 times 20. Call it $500 per contract traded. It's a little more than that. 500 down, 500 back up, 500 down, 500 back up. Now the actual alert from 22. Well, that is the actual alert. Yeah, 500 down. And then on this move, it was 22. We dropped to 08. $280 per contract traded. Back above the trigger. $500 drop. Now we're back above the trigger again. And below the long trigger. Now let's do crude. Now, crude, when it made the bearish cross yesterday, right at the Globex open, right towards the close of the day session, and that's the first candle of Globex right there. Price is consolidating in the weekly trading zone. Tries to rally, can't do it, so we start the journey down. And we pull back up to the BBC. We expect it to be good resistance, it was. And it took us to a swing low, 55.76. Now it certainly looked like price was going to make it to the zone below. This happens. First clue is price gets back above red and falling, which turns it into blue and climbing. And then you get back above the BBC. The narrative changes, okay? On the close of this candle, open of this candle, the narrative is now long to the zone above. Here, short to the zone below. Change of plans, new narrative, zone above. If you can do that, if you can stay on the same side of the street with price, you'll do fine. You'll do fine. Concierge Trade Alert last night for crude, short 56.70. That's right here. Okay. $56.70. We made it down to 76. If we had made it down to 55.70, if we had made it to this spot right here, that would be $1,000 per contract traded. For 10 contract trader, it would be 10 grand. But you got to earn the right to trade 10 contracts, and you should earn them one at a time. Earn the right to go live in SEM, the way we teach you. Earn the right. Then go live with one. Increase your account balance by $2,000. Add the second. Now going forward, you're building your trading business on a very solid foundation. You're increasing the number of contracts you trade in a controlled manner, a very methodical manner, but most importantly, you're funding each new contract with profit that you yourself earned in the market. That's a big thing. That's a big deal. You should dance in the street when that happens, because you're on the right track. Now, the difference between trading one contract and 1,000 is your mental preparedness and your fiscal fitness. Obviously, you got to be fiscally fit to trade that many contracts. After that, it's all a head game. And you got to get yourself out of your head and think about it logically and clearly, void of emotion. Because if you think your belly does a flip-flop when it goes one tick in the wrong direction and you're down $10, imagine when you get 4 or 5 down ticks in the wrong direction and you're trading 10 or 20 or 50. Will this market support that kind of volume? Absolutely. Where 1 minute We're 1 minute into this new 30-minute candle. We've traded 500 contracts already. Last half hour, there was 14,000, 22,000, 43,000, 36,000. So yes, however fiscally fit you are, this market will accommodate you. The ES will accommodate you. Typically, gold will accommodate you. There are other high volume markets that trade around the clock. That's one of the beautiful things about futures. It's trading on your terms. If you're an equity trader, you got to wait for 9:30. Got to wait for that bell to ring on Wall Street. But as a futures trader, you can go to work Sunday night. Just like that's what we go to work every Sunday night, 6 p.m. Eastern. Wake up, have breakfast, go to church, get your worship on, come home. Sunday lunch followed by the all-important Sunday nap. Set your alarm. Up fresh as a daisy, 5:30 p.m. Eastern. Ready to go to work, 6 o'clock. Some Sunday nights are very exciting, and some Sunday nights it's quiet, kind of like watching paint dry, until we start heading into that London Open, and then things start to pick up. Okay, almost $1,000 per contract move in crude. That's with one contract, not 10 or 100. And let me just say again, please don't go live before you're ready, and don't trade multiple contracts until you earn the right. Just can't stress the importance of that. That will keep you fiscally fit. Okay? If you do it any other way, you're going to have a great tale of woe to share with everyone. And here's the secret, nobody wants to hear it. Okay? All right, let's go to gold. Now, let me just say it one more time. Entering here to the swing low, $1,000 per contract. If you had this information and you did not take some of this, you have to ask yourself why. There may be something going on that you haven't come fully to terms with yet. So ask yourself those hard questions so I don't have to. Right? At least that way you can practice your answer before I do ask. Because in our mentoring session, I will ask. Because you tell Michael and I that you want to learn how to trade, you want to trade for a living, whatever your unique individual story is. So I make note of your goal the first time I meet with you, the first time we have a one-on-one mentoring session. And I'm going to hold you accountable to what you tell me your goal is. I'm sure you would want it that way. Okay, goal. Here's the goal. All right, last night, consider being short, 1460. Whoa, look at there, 1460. We only dropped that. From 1460, we put in a low at 57. So that's a $300 per contract move. Got back above the trigger. Ran into resistance, BBC. That's what we anticipate. We traded through blue and climbing. Now that's important. One of the markets we just looked at, when the pullback turned into blue and climbing, price couldn't get through it. And remember, the narrative changed. That was on crude. Price got it kept moving above the BBC. So this is an important development. We closed below blue and climbing. So now, even if price pulls back up to the BBC again, you got like a double layer of resistance there. This was the lowest weekly trading zone up here, 82.83. We got no more zones below. In fact, we've already blown through last week's zone, I think, 65.66. That was the lowest zone last week. The week before was the same number. Week before that was 14.20.21. I hate to think of that happening, so hopefully this will suffice for gold and we'll see the market turn around. All right, I'll show you bonds, and I'm done. Has anybody seen John?
No. I have not seen John at all. Oh, no, he just popped in.
Oh, did
Just
he?
popped in.
Okay. All right,
Open
then.
him. There he goes.
Hey, John. Welcome to the show.
Well, there he is. I think that's it.
Oh, I just saw the questions in the chat box. Frederick's already gone, so, Valerie, maybe you could just send him a link to the spec sheet, or I can.
There's John.
Hey, John. No, Kevin, that was fiscally fit, not physically. Fiscally fit. John, are you there? John's out there, man. All right, well, we'll look at bonds.
Okay. Well, we heard his mic is open,
Yeah,
and we know he's out there.
yeah. Here we go. Bonds. All right. Last night's alert for bonds said to consider being short 156.11. And the swing low was 55.26. 31.25 per tick. 32 ticks to a point. Hey, John, that you?
Yeah, hi. Sorry. Thanks.
All right, welcome to the show.
Yeah, thank you.
Good to have you with us.
Likewise, great to be here. I don't know if I mentioned this, but Trump's approval ratings jumped 4 or 5 points yesterday, which is quite, it's quite a big deal, because I think the Dems were deliberately trying to, put all this stuff in place. Number one, to probably defray what's about to come down from the Justice Department, and secondly, to I'm sorry, I might have to take this. I'll be right back to you.
Yeah, go ahead, John. All right. Soybeans. We had the WASDE report today. I meant to mention that in the training room this morning. That's the monthly agricultural report. And so the number came out during this 30-minute candle. Last night, Concierge Trade Alert for soybeans. I know not many of you trade soybeans. That's why I usually don't recap them here on the show, or bonds. But we do put the number out every night. We have for years. So soybeans short 9.24. Haven't touched it. Long 9.40. Can't touch that. So no trigger for soybeans. Okay. Back to the S&P. What gives, everybody said. Well, here's the deal. We expect this to be good support until it isn't. Price can get on the other side of the BBC. Obstacles in the way would be this swing low, followed by this important area, and then back to the zone where we've already been today. So from 73 to 86, 13-point move, down, back up. Yeah, hi, John.
Yeah. So the fact that he bounced back to 50 is quite remarkable, frankly. I don't remember him gapping up that much since the whole thing began, and such a gap, just like charting, it probably means there could be an upside breakout. And what's interesting is this market. I got to tell you, this is a Teflon stock market. This market has got real power because there was a Zero Hedge article this morning saying that one of the negotiating team said with China said they actually want Trump to be reelected because they're very, they actually know where they stand with the guy. He doesn't sort of, mess around, and it's pretty transparent. And he's actually starting to get those kind of comments from a lot of leaders around the world. So that's kind of interesting. And then the other thing is this morning, right after that, so that may have helped the market up a bit, and then right out, because we got beaten, we sold off last night again. I think when Bloomberg was announced, that was a minor kind of a dip that caused that. And he's not a third-party candidate. I think if a third-party candidate were to come in, the market might take a bigger dive. But he's a sort of a third-party candidate in a way. That's why I think the market had a little bit of a slump, but it came back again. I just want to check the DAX, because the DAX yesterday was particularly strong. Yeah, look, this DAX kind of looks like it's going to take another major leg up here. VIX is kind of making new lows, so the VIX there's no premium in the VIX. So this market potentially is setting up for another strong week next week. After a pretty enormous week this week, and then shortly afterwards, Trump said something about I haven't given the go ahead on reducing the tariffs yet, and that knocked the market down this morning. But before you know it, we're rebounding again. We're still a bit negative on the S&P, on the Dow and the S&P, but the Nasdaq's gone back positive, and the mid cap actually looks. Even after being a bit weak yesterday, it's looking better today. The semiconductors are almost back at record highs. So, this is really remarkable, this market right now. And as I said a couple of days ago, if we have a strong finish on Friday, that sort of seals the deal on further upside next week, barring some kind of unforeseen development. I do believe as we get closer to the hearings, there might be some nervousness and possibly some weakness. But on the other hand, if the hearings kind of show up some of the things that have been alleged and all that, and they're not proven, or there's this guy, this so-called star witness, he got all his info from the New York Times. I mean, you can't make this stuff up. So I think the fact that the ratings went up, the approval ratings went up so dramatically, is because people were sort of taken in by the thing at the beginning and really thought that he was in trouble, and now they're not buying it anymore. And maybe in the last few days, they're starting to see through the whole thing. So that's kind of my assessment. And look, there's a chart. Actually, can you pull up a zero hedge thing there?
Zero hedge, sure.
Yeah. There's an article from Saxo Bank. And this proves everything we've been saying about the stronger economy ahead. In fact, we could be looking at something really. Keep a little bit further down.
Okay.
Almost there. A little bit
Saxo?
more. Sorry.
Most important chart of the month.
That's the one. Yeah. I mean, if you can blow this up, this is really something amazing. Because look at that. This is like a template of China, if you like. And look at that incredible run up back in 2008. When China when China went through the roof, all-time record highs, and the economy really was growing at sort of 15% or something crazy like that, 15-20%. And I think this is a much truer picture, of the real GDP. And obviously, the market went overshot, just like the stock, the U.S. markets did in 2000, and had a big collapse, and then had this big rally. But what's interesting is the the lift off from this last bottom here in late 2018, about a year ago, this thing forecast the economy by about 9 months to a year. So it's very optimistic, because really that big upstreak that's late 2018 is really kicking in, should be kicking in right now on their economy, and probably on ours as well, and on the world economy. I think this is a pretty good template for the world economy, actually. So I think that's remember, we were maxed out on stimulus all over the place. They're increasing the stimulus. If the UK are cutting rates here, as an increase in stimulus, the US is cutting rates. They're probably doing a lot of other stuff. They've injected, close to $1 trillion. I mean, these are big things that, they may not have an immediate impact on the metals, on the gold market, but this, if we're getting a kind of a certain amount of what they did in 2009-10, it certainly sets the potential for an uptrend, a very sharp uptrend in the metals over the next 2 or 3 years, which we've already talked about. And the other thing is we're 9 months, 10 months now, 10, 11 months from the liftoff in January. We're only a couple of months into that liftoff, versus in the economy. We said, the September, August really was the bottom, and look at where we've come from since then. So I think it's reasonable to assume that the indicators are going to perhaps have some upside surprises here in the next few months. And then we've got Black Friday, Thanksgiving. We've got the post-Thanksgiving purchases and things that are maybe at all-time records. That's going to push the market higher. Then we've got Christmas and that sort of thing. So there's plenty of news, market-moving news, that could just add more upside to where we're going. And rising into the end of the year, there's a tendency as well, which probably a lot of people don't know, but there's a tendency to, if you go back and look at every decade, it's a tendency to rally into the end of the decade big time. So rallying into 2020 is kind of potentially what's going on right now. And to Garrett's chart earlier this week really got my attention, and it's certainly being proven that was a pretty significant breakout on his stuff. That I think we've got 2 or 3 strong months ahead. November, December, January. You have to be careful, because you could get a repeat of 2018 or even 2016, where we might not have a great start to there might be something going on in the first week or 2 of January that might be negative, or it might be positive. So there's no guarantees that the liftoff this coming January are going to be as strong as last. But given that we're going into a two-year anniversary of 2018, we didn't top out until the end of January. Given the cyclical nature of the elections and everything like that, I wouldn't surprise if we have enough firepower going into the end of the first quarter, possibly even the second quarter, before we might run into some sort of trouble. And as the year goes on, and this is important, as 2020 goes on, the higher the market goes, the more likely it is that Trump's going to be reelected. So that's something to keep in mind as well.
Okay.
We're getting sort of buying indications on the gold stocks. The gold's actually gone a bit lower, and the gold stocks are generally not at their lows. They're close to their lows, but they're possibly making potential double bottoms. What's been kind of difficult with these gold stocks, to be honest with you, is picking the bottom of them is not easy. And very often you know, you have a day like today where there's a marginal down move, and then next thing you know, something happens on Monday and you're chasing these things higher. I think that we could be looking at a little bit lower before that. Possibly Monday might be a low or a buying opportunity. We'll have to see. But why don't you put up Royal Gold if you can? What's that MES? What's that going?
That is the micro S&P.
Oh, the new thing, right?
Yeah, it's
okay.
it's the same market. There's just two different contracts.
Yeah.
There's the regular contract and there's the micro, which is 1/10 the size of a regular E-mini. So instead of $50 a point, it pays $5 a point. It's great for people that are just learning.
Sure. No, that's excellent.
Okay, you wanted, did you say Royal Gold?
Yeah.
All right. Let me put it on a daily.
See, it's kind of, it looks like it's bottomed, but I wouldn't bet the house on it just yet. You know, it's probably got a developing weekly reversal as well. But the fact that it turned, you know, this is a stock that had a bit of bad news. It got knocked down, and the fact that it's kind of stronger than the rest of the market is quite. Oh, just a sec. I got to take this. I'll be back.
All right, go ahead. Go ahead. Okay. All right. I think John's going to be a minute. Let's go to the good word for the day. If you have any questions, anything, put them in the chat box. We'll get them answered for you. A 30% stopped out this week on Logic 247. True story. Yep. We've had weeks of 0, weeks of 10, weeks of 14, more weeks of 10. I think this is probably the second worst week in Logic 247 history. We're on week 65, week 66, I believe. Yesterday we talked about forgiveness. Today, anger management. That'll tick you off, right? Ephesians 4:26. And don't sin by letting anger control you. Don't let the sun go down while you are still angry. And everybody's thinking about that classic Elton John song. Don't let the sun go down. Yep, that's the one. Good tune. The first mention of anger in Scripture is when Cain got so angry with his brother Abel that he murdered him. In Australia in 2018, 3 people died each week at someone else's hand. And a side note, so far this year in Mexico, 32,000 murders because of drugs and the cartels and human trafficking. 32,000. I don't think that many people have been murdered in Chicago this year. I don't think. And that's saying something. Anger not only kills others, it can kill you. Dr. Redford Williams, professor of psychiatry and behavioral science at Duke University, says the hostility and anger associated with type A behavior is a major contributor to heart disease. People who struggle with anger are 5 times more likely to suffer coronary heart disease, and people with heart disease more than double their risk of a heart attack when they get angry. So what do we do about this? Now, of course, there's a difference between anger and aggravation. But sometimes it's just a small gap, right? A little girl asked her father to explain the difference between anger and aggravation. So he picked up the phone, dialed a number, allowed his daughter to listen in, and when the other person answered, he said, "Hello, is Melvin there?" Back came the answer, "There's no one here named Melvin. Why don't you look up numbers before you dial them?" The father waited a moment, then redialed the number. "Hello, is Melvin there?" The man on the other end of the line yelled, "I told you there's no Melvin here. Don't call this number again." And he slammed down the receiver. The father looked at his daughter and said, "Honey, that was anger. Now let me show you aggravation." He dialed the number again. A voice roared, "Hello?" And her dad calmly said, "Hi, this is Melvin. Have there been any calls for me?" The word anger is only one letter short of the word danger. So ask God to help you manage your anger, and He will. That's our good word for the day. Don made a nice comment regarding my comment about the number of deaths in Mexico. Don says, "And to think that guns are illegal in Mexico. A case study gun control people in the U.S. should think about." I agree. Chicago has very strict gun laws. It's not helping them any. Alan, hey Alan, how you doing? Alan asked if I have time to take a look at the daily crude chart. I sure do. Let's do that right now. And that sets the egg timer for John. If John's not back by the time I finish the daily chart on crude, I'm going to go over the river and through the woods. I won't go to grandmother's house though. Jeez. All right. Crude, come on down. What happened? So this is what it looks like when your charts lock up. And the wheel goes round and round. John Lennon, I'm just sitting here watching the wheels go round and round. That was his first album with Yoko Ono. Well, it's been a week since I rebooted. I guess it's that time again. So Alan, when the circle quits going round and round, we're definitely going to look at crude. Assuming that happens sometime here in the immediate future. While the wheel's going round and round, I'll share this with you. We often in our life spend money we don't have to try and impress people we don't even like. You ever done that? If you're a people pleaser, there's nothing wrong with trying to be nice and, hoping folks like you. But it can become more than that. It can actually become a problem. You're never going to please everybody. In fact, I gave up a long time ago. I set my priorities, and that seems to be working out just fine for myself and for others in my life. Sometimes we think too highly of ourselves and we think we're the center of everyone else's attention, and we're really not. It's a good idea to be cognizant of that. So if you find yourself in that situation where you're trying too hard to please too many people and it's just not working out, Ecclesiastes 2:6. For to the man who pleases him, God gives wisdom and knowledge and joy. If I make you happy today, what are you going to give me? Now, if I try to make my wife happy, she might give me dinner on time. She might not give me a hard time, but think about it. All these people that we're spending money we don't have, impress people we don't like, and whoa, it's mad. It's madness. Stop the madness. So every day, I just try to remind myself. Now, I want to be kind and polite and gentle to everyone I come in contact with, unless they ask for something different with their behavior. But if I can just stay focused on pleasing God, everybody else seems to just line right up, because if I'm doing what's pleasing to God, even if I'm doing something that other people might not like, they're going to recognize that I'm doing the right thing. It may not be popular, but you always know the right thing from the wrong thing. So if somebody might get you dander up, stir you up, aggravate you, but you don't get too crazy, because you know they're right. They're doing the right thing. But if instead, set your sights on pleasing God instead of pleasing other people, and life becomes decidedly simpler. And the payoff is immediate. For to the man who pleases him, God gives wisdom and knowledge and joy. If you've got wisdom and knowledge and joy, you don't need anything from anybody else. You may want things, but you don't need, because you've got it all. Wisdom and knowledge and joy. I'll take 2 to go. Okay, daily chart of crude. Well, did I lose my connection? Anybody else having a data issue? Yeah, it looks like I'm not connected. How'd that happen? Well, let's see if I can fix that. Apparently I'm not going to get any, as I go, I can't get no satisfaction. All right. Is that you, John?
Yeah, hi, thanks. Pretty good rally in the crude, actually, again, on the cold weather stuff. There was a kind of a neat pullback to get long yesterday, if you were lucky enough to get it, which looks like you were, so well done on that. Yeah. Look, a couple of things are cooking here. Cocoa, which we've talked about recently, I'd say if it gets back up towards 2,500 again, I think you could take a shot at going long. It's on a pretty strong day today, and it's starting to look fairly bullish, this cocoa, and there's a chance it could really go on a tear up towards 2,800 previous the big high we had a couple of years ago. I think we got up to 2,800, something like that. Coffee, after a pretty big run to the upside, is pulling back a bit today, but not too much. But it has had a really considerable streak higher. It's really gone from the low 90s up to about 112 or something. The thing that got beat up a bit today is the palladium. It's if you want to pull that up, it's actually taken a pretty big hit after an incredible run. It looks like a trend change, but sometimes in these very bullish markets you can get a bit of a dip and then it can recover. And
There you go. Put it on daily.
Yeah. So hang on a sec. Yeah, you can see that that drip, that drop there is first drop of its kind since the last hit back in August. As long as it doesn't get too much downside follow through, it's probably going to be okay. But if you are long, I'd be careful. I'd probably wait. I'd probably be out and wait till there's evidence that that the uptrend's going to be resuming. I'm not sure I'd short it, frankly, because you could come in Monday morning, a thing could be up $40. So I think that's the way to just let's wait for a few more days and see how things develop. The grains didn't really do much, if this report came out. So I think that, in fact, the wheat sold off a bit. They're selling off a bit again today. So I think what I would probably do with the grains is I would put buy stops above the recent highs here in the last few days, because I think if they get going from here, they're probably going to go up a good bit, but they're definitely getting hit. Not tremendously today, but they're getting hit nonetheless. The beans in particular, and the corn looks like it's spiked up and it's coming off. So
yeah, we had the WASD today.
Oh, it was today then. Okay.
Yep. That's what you're looking at. Corn.
Well, yeah, it's hitting the wheat, the corn. The sector generally is weaker today.
There's
So
December.
yeah. But in spite of that, if we suddenly, that spike now, taking out that spike that happened today, it's probably going to be a pretty big deal.
Today. Yeah, this
Yeah,
is
exactly. Yep. So I think a buy stop above, just in case something happens, and if you want to make sure you're getting on board, this is probably the way to do it. The dollar. Can we look at the dollar? We haven't looked at that for a while. The dollar's actually pretty strong here the last couple of days.
Okay. Let me bring it up.
Yeah.
There's the dollar.
Yeah, it's really that double bottom kind of did the trick, and the dollar. Look, remember, we're going to be 4 years from the transition. Wait a minute, was it 16, 17? I guess, yeah, I think it was 16. Yeah, can you go back? Can you look at the history of it there?
This is monthly.
Yeah, if you could squeeze it up a bit.
Yeah,
it was
at
the turn of 15, 17. So given where we are, I think with the end of the year coming into play, we might see a little bit of a spike in the dollar going into the end of the year, and possibly going down thereafter. So that's something to look for. Oh, the other thing we haven't looked at recently is the bonds, which have came down according to what we were expecting, come off pretty sharply. But I think the bonds, with a stronger economy and everything. By the way, the rates in Europe are picking up as well. So this is the beginning of a potential inflation ahead. When the dollar starts breaking down and the bonds start breaking down, because at some point they're going to go together. They're not there yet.
Okay.
So if you could, if you could put the bonds.
Okay. Put on daily.
Yeah, these bonds have been. So look, you know what's all that's happened is we've come back to that previous resistance point, and in spite of the potential stronger economy, there could be a lull here where maybe the bonds, you know, especially if the market comes under a bit of pressure, I think the bonds might rebound a bit, possibly a lot. If things, you know, if the economy were to get weaker, you could see the bonds maybe have one more run to new highs. I wouldn't be disappointed in that, but it's a possibility. So listen, I just want to wish you a great afternoon and a great weekend, and thanks very much for the audience for listening, and I look forward to seeing you Monday. Okay. All the best.
Thanks, Sean. Have a great day. All right, guys, that's going to wrap it for this week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue. Oh, you know what? Alan, I've been fidgeting in the background with my chart. I'm going to have to reboot the platform. Tell you what I'll do. When I get my chart back up and running, I will run down Crude, and I will drop a short 5-minute video into the Telegram channel, into the members discussion. You have access to that, and plus I'll email it to you. Okay? All right. Again, it's the weekend, so spend some quality time with your family. I'll see you in church on Sunday. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.